Banks will internally charge off the loans. They'll do, what they need to do to make their books look good. And they'll pull these mortgages and sell them to players like myself at discounted pricing. A firm like ours, we're built to help the homeowner in ways that the financial institution wasn't able to. In other words, we can find customized solutions that are creative, that help lower monthly payments, that help extend terms, that does certain things to help the homeowner get back on their feet so they don't have to be displaced.
Hey, it's Rocky. Welcome to Richer Soul. Today's guest is Martin Saenz, who's going to introduce us to mortgage note investing. Imagine it's 12 months from now, and you've achieved your major life goals. How does it feel to be in the best shape of your life? To wake up energized, excited about the day? To have great relationships and friends who support you and propel you forward? How does it feel to have an excess of money, to be able to make the choices you want? To be fearless and open to trying new adventures? Imagine being connected to the universe and it providing everything you desire. It's possible over time, and your past does not dictate your future. The only thing holding you back from this vision is you. It's time to take control of our thoughts and use them to our advantage. Welcome to Richer Soul, where we achieve our dreams and create harmony to health, wealth, relationships, time, and spirituality. If you have not had a chance to listen to episodes 1 through 9, I encourage you to go back and listen to the framework behind Richer Soul and how to create the life of your dreams. You can also find all the show notes for this episode at richersoul.com. Today's quote comes from Robert Kiyosaki. The richest people in the world look for and build networks. Everyone else looks for work. We're going to chat a little bit about that today. And think about that as you hear our guest's story. I've heard it said, your network equals your net worth. Because let's face it, we need other people to help us. Imagine if you were friends with people who could open any door, make any introduction you wanted. How would that change your net worth? It's another skill they don't teach in school. And I had to spend a lot of time learning to get out of my comfort zone and how to do this in a way that just isn't sleazy, because it's not supposed to be. It's been a fun journey. Today, I want to explore a totally different area of real estate, note investing. You actually buy mortgages from banks that are not performing, and you get them at a discount. And then you work to get them paying again. Worst comes to worst, you have to foreclose on the property. It's another angle in real estate investing. There's so many ways to invest, and we've not had an episode in this particular area. Plus, I think with the changing economy, what's happening with interest rates, and what's going on in the world, it may be an opportunity that becomes really profitable in the not too distant future. I know in the downturn of 2008, it was highly, highly profitable. Here's the other thing. If you're too busy, you can always partner with others and let them do the work for you. Our guest is Martin Saenz. He is a successful entrepreneur, accomplished writer, and a real estate investor. For over 18 years, he has owned and operated multiple successful companies and educated thousands on mortgage notes. He's frequently described as genuine, loyal, and passionate about creating a better world for all through profitable businesses. Let's meet Martin. Welcome to Richer Soul, Martin Saenz. It's great to have you join us today.
Thanks for having me on, Rocky.
And I'm excited to learn from you. But before we do that, let's start at the beginning. What was it like when you were growing up, and how much did your family and school teach you about money?
Yeah, so I was fortunate enough to grow up in New Jersey in a nice town called Westfield. and it was a good upper middle class type upbringing, and it was just a good place to grow up, and kind of fast paced because it's Jersey, it's right outside New York, so I kind of learned to hustle and bustle as it relates to money. As soon as I could do chore money, as soon as I could be hustling for money, I was doing it. So I found myself to have a love of earning money at a very young age. And it was almost kind of innate in myself.
So that wasn't something your parents taught you. It was more you just had this desire to figure out how to get money?
Yeah. So I was 5 years old, and I found some rocks in front of the house, and I washed them in a pail. And then I went to the neighbors' houses to sell them door by door. And my parents didn't know anything about it. And it was just, they never talked to me about doing something like that. It was just kind of always in me to be hustling for money.
Did you make a lot of sales?
So, I made a few. And then the neighbors let my parents know what I was doing. And, gosh, I think now, like in these times, and I have 4 young kids, and I don't know that I would let my 5-year-old go door to door like that.
And it's fun, and I don't understand why we're so scared of it today.
Yeah.
Is it the news, or is it just? I mean, if you lived in Westfield, it's an upper class neighborhood. What's going to happen? You go knocking door to door.
Yeah. No, I'm in Florida now, so the business is in Florida. But either way, I don't know. I think it's just a kind of a different day, if you will.
It is. You never know.
Yeah.
School didn't teach you anything either then?
School didn't teach me much, or I didn't allow myself to be taught, I think is kind of better put. K through 12, I was a C student at best. And I just didn't, it just didn't resonate with me, the style of learning, memorization, memorizing things that I didn't find important. I guess I just kind of tapped out mentally. I was kind of bored with it all. And so it wasn't until college where I found a love of learning and reading and writing as well.
And I can agree with you there. I had the same experience in school. After a while, it got boring and didn't seem useful anymore. I feel bad for kids today because it's probably 10x worse than it was back then.
Yeah, but I praise the kids that can rise above. And even though it is all those things, they still excel and do the work. So I commend those individuals.
I commend those that walk away and create their own path and say, you know what? We're not going to do this school thing. It's funny because just this morning I posted something from Seth Godin. He was talking about ChatGPT. And he's like, kids are now writing their essays on ChatGPT and turning them in. And schools are freaking out. And he's like, but this is the world. Like, why are you teaching people to live in a world that no longer exists? If we have computers and Google will answer when the war was, you need to teach kids how to think, not how to just regurgitate, as you talked about, useless information. So to the next level.
Yeah, I mean, we could go into financial literacy and, with all that, the lacking in the school systems. And that's what my passion in life is, building monthly passive income. And so that's my whole world. And I know that that's what most people and families need in the whole world.
And we'll talk about that. Before we do, for somebody who was tired of school, how did you end up deciding to get a philosophy degree? Because that's usually not the path people take when they've had enough.
Yeah, so I went to community college after high school for about a year and a half. And I had a professor. He was an African-American gentleman. And he gave me the book. It's Richard Wright. Black Boy was the name of the book. And he told the class, he said, read this book and then write an essay, whatever many words, by next week. And he was like so nonchalant. He was like, I don't care if you do it. I don't care, if you don't do it. He's like, doesn't matter to me. And And so that appealed to me. It was like everything was just on me to get it done, and it wasn't about regurgitation of what I learned. It was more just it had a whole creative feel to it. And so I read the book and it just kind of fell in love with it, and was able to express myself on paper. And so from that point, I learned a new side of learning. And I think that kind of led me towards philosophy, where I would, really just kind of hone my logical thinking skills, critical reasoning, and just kind of looking at the world from different perspectives.
It's funny because I never thought of philosophy in that way. And I've now come to realize that that is what it is. And so it's been misconstrued. It teaches you how to think critically.
Yes. Yeah, you have premises and you have conclusions. And, most of the time people are listening to premises and they think they're conclusions, it's just, just kind of deciphering information, organizing it, processing it, like all these. This is all what philosophy teaches you to do. That's why many philosophy majors come out and become lawyers.
Interesting. Do they actually? Well, I guess they do. It depends on what kind of lawyer they are, right?
Well, the philosophy and English majors tend to score the highest on the LSAT, which is the entrance exam into law school. Okay.
So they're looking for a certain kind of people. It's funny how many people go to law school and never practice law. I think it's about half.
Well, it's even funnier because how many attorneys go to law school and come out and they're broke, and they never realize how little they're going to make and how much they're going to work for the little they're going to make. And our practice hires numerous attorneys at any given time. So I'm pretty familiar with that side of the fence.
You know what the joke is in law school?
What's that?
Well, why'd you pick law school? There's no math class. That's why they struggle with financial side of it.
Yeah.
Because they have an aversion to math. And law school, you don't have to take math. It's one of the few advanced degrees that it probably is just not part of.
Interesting.
And unfortunately, I don't think most law schools teach the business of law.
Yeah.
Most medical schools don't teach the business of medicine. Dentistry schools teach the business of dentistry. They're unique in that. It's very...
Well, that makes sense because so many come out and they're sole proprietors. However, they're all getting gobbled up by VCs right now in that profession. But attorneys come out and, law schools and large firms want to pump out employees at the end of the day, not sole practitioners.
And that's a shame. Then,
That's every industry. That's not even, that's every industry.
But then you don't get freedom, right? To do what you love.
You don't get freedom, unless you just at first just learn the fundamentals of financial literacy and building a financial statement, just starting from that perspective.
That's true. And regardless of whether you're a business or a person, either side, you still need a good financial statement and good financial literacy. I tell people on the personal finance side, you should run your personal finances like a business.
Yeah, and you should have a living financial statement that you update. I update mine weekly, and I meet with my wife on it weekly, and we know where our financial picture is at any given time. And I look at all my accounts on a daily basis to kick off my day, and there just needs to be a total attention towards your finances if you want them to grow.
So how do the financial dates with your wife go?
Oh, she loves them because, we have 4 young kids. She used to homeschool. Their kids are in private school now. But she volunteers at the school. So she's like in the kid world most of the day. So if we go out on date night, I'll roll out the financial statement. She'll love it. I mean, maybe not as much as me, but she likes it. And then, she'll ask me questions and call me out when I need to be called out. And so but prior to kids, we had our own business, government contracting company, for a number of years. So she's been a business owner for a while.
So she gets it. She understands what it's all about.
Well, she gets it, which is why she doesn't even like to come into the office now for BQuest, our company. So she gets it to the point where she wants nothing to do with it.
Hey, as long as you can make enough money to live life on your terms, live it on your terms.
Yeah, that's my whole, that's the blessing that I've had in life. And I say that with humility is since we sold the government contracting company 10 years ago, she has not had to think about money for one moment from that time. I mean, we're far from wealthy, far from that. We don't need to be at that level, but the monthly passive income that comes in, it does what it needs to do, and which is not make her worry. Now I worry, right? I run a company, 25 employees, and I take the pressure on my shoulders, but for her not to worry is everything to me.
Well, that's nice. So we're here to talk about your book and what you do, which is note investing. So let's just kind of start out with the basics. I think this is something that people are not so aware of, is when you get a mortgage, right? You sign a mortgage and a note. The note is the promissory to pay back the bank. Most notes are usually immediately sold. Like you sign the mortgage and it gets sold off to somebody else, and then the banks, many of them have it on their books. What I've come to learn this time around, because I know in '08 things were very different. This time around, I'm noticing banks, when they've got bad notes, are just dumping them. And maybe they've been doing it all along since '08. Rather than try and get people current, they don't have the systems and processes to deal with these issues. They just sell the note to get it off their balance sheet at a discount. And somebody like you buys the mortgage at some sort of a discount to market.
Yeah, absolutely. No, it's been going on for decades. I mean, this practice, banks will internally charge off the loans. They'll do, what they need to do to make their books look good. And they'll pull these mortgages and sell them to players like myself at discounted pricing. And, but we're, a firm like ours, we're built to help the homeowner in ways that the financial institution wasn't able to. In other words, we can find customized solutions that are creative, that help lower monthly payments, that help extend terms, that does certain things to help the homeowner get back on their feet so they don't have to be displaced and they can live in their homes. And banks just aren't built that way. They're overregulated. They have to answer to board of directors, shareholders, and all this bureaucracy that really prevents them from doing right by the homeowner.
And I totally understand that. And again, I want people to understand this. Your goal isn't to buy the note and kick the people out of their house. Your goal is to buy the note and get them paying again and fulfill the mortgage.
There are two different sectors of our industry, and that is there's hedge funds and other operators where it is their sole focus to displace a family so they can take possession of the property and reposition it. Sell it with seller financing, make it a rental, resell it, in the open market, something to that effect. So up front, initially, it's more lucrative to take that angle. You're going to 2x, 3x your money in the first year or so. Now, our position is to help the homeowner stay in their home with a payment they can afford while making a profit for our company. And we do that because if we're able to modify their loan with terms they can afford, then it's sustainable. And we develop a 20, 30-year cash flow stream as a result. And that's how our company operates.
Out of curiosity, have you seen changes in people's behaviors over the last couple of years as far as trying to renegotiate notes or get them back onto payment plans, or has it been business as usual?
It's actually, we've seen people more eager to work out terms. So 10 years ago, where there was more higher unemployment, where people didn't have as much equity, there was less motivation from homeowners to work things out. It was a tougher way to go from being helpful towards the homeowner and working out a win-win solution. But in this day and age, with fair market values being where they're at, people are just more eager to work things out.
So what kind of percentage discount would you get? Let's say I'm buying a $100,000 note, or at least that's the outstanding balance. It's not performing. How much would I expect to pay for something like that?
I mean, it could go anywhere from 20 cents up to 80 cents on the dollar. It just depends on the quality of paper. Just like with a property, no two single families are the same. No two properties are the same. It's, what's the neighborhood? What's the track record? How's the condition of the housing, the house itself, et cetera. So there's a lot of variables involved. The key is to know when you buy a 20 cent on the dollar note, you know that you're buying a 20 cent on the dollar on the note at the time. That's the key, not to pay 80 cents for a 20 cent note.
Well, and I think that's where people get confused, right? They look at it and go, oh, this one's cheaper, so I'll buy this one. That one's more expensive. I don't want that one. But there are a lot of other factors that you need to consider in doing this. So can you explain some of those factors?
Yeah. So just kind of like on a broader perspective, what you're putting out there applies to investing in opportunities in general. Right. Who the operator of the fund is, or the opportunity, what's their track record? Do they know what they're doing? What's in place from a capital preservation perspective in terms of the quality of the asset, and then the rate of return. Most novice investors really just look for the return, right? Like, what's the highest returning, real estate offering in my neighborhood? They're just looking for the number, and they're not looking for everything behind it that gives confidence to that number. But from the perspective of due diligence on the mortgage note side, we'll look at the property valuations online. We'll do a broker price opinion. We'll triangulate pricing data or property value data. We'll do bankruptcy search, credit report, risk analysis, skip tracing, title search, and a whole host of things. At the end of the day, we want to understand what the underlying collateral is, what's it worth, and we want to get a sense for the homeowner and their ability to pay us prior to purchasing that mortgage note.
So you just talked about doing a lot of different things. How quickly can you get that done?
Well, we have 25 employees, so we have an acquisition team. So we can run through 100 mortgage notes in the matter of 2 to 3 weeks from where we know with confidence what we have, and prior to purchase. So my partner, he runs acquisitions. We have a controller. We have someone that does the due diligence, and so we have an assembly line operation. And so about 2 to 3 weeks to run through 100 mortgages.
Today's episode is sponsored by Profit Answer Man Podcast. Did you know that most small business owners hate looking at their financials? It's one reason they may struggle with business success. The Profit Answer Man podcast helps them ensure they are profitable and can pay their employees and weather the storms we all have to face. It's built on the Profit First methodology of pay yourself first. The Profit Answer Man podcast is a must listen to for every small business owner and anyone who wants to help them survive and thrive. Check it out on your favorite listening platform. That's pretty good. And part of this whole thing, and what it sounds like you have a team. And I think when people get into real estate, they don't think about having a team and building a team to do the different things that they need done, and having kind of people on speed dial when you need them on speed dial.
Yeah, people can make you money. I mean, if you if you have a vision for where you want to take your company, if you kind of build a plan to scale, and that scaling involves people that are committed, that are next to you, so you're not doing all the work yourself. And as long as you're managing and motivating individuals and hiring good people too, right up front, the people can be an asset. Otherwise, they can be a liability, right? If they're there and they're in the wrong seat, and they're costing you money, et cetera. So that really depends on you as the operator, as the owner, the leader of the ship, whether they're an asset or a liability.
So in order to do note buying, can a solo person do this on a small scale themselves, or do you need to have a company to do this?
Yeah, so for the first 4 years, I did it by myself. And so that's when I wrote my first book. I've written 3 books on the note investing industry. The first one, Note Investing Made Easier. And that was in 2017 when I wanted to share what I know. So for other entrepreneurs, other people that were, hating their W-2, wanted something more, wanted something different, to jump in and do this themselves. So I took them through my day-to-day of being a note investor as a solopreneur. So it can be done. It's a little bit more challenging in today's climate because there is more regulatory risk involved with note investing from a compliance standpoint, from a state-by-state basis. And so you just have to be conscious of that risk, and you have to have a little bit more capital out of the gate to mitigate risk from that perspective.
And I know in the book you talked about it. It's not like I buy a note today and tomorrow they're paying. There's costs involved in buying the note. There's costs in getting it to perform. There's other costs that you may have to cover in the meantime, depending on the situation. And so you do have to have enough capital to be able to do that and to invest. But you also talked about average returns of 30% in that book. So you do have a good return on your investment, but you need cash to go into the deals.
Yeah, you need cash. You can form alliances with other note investors, find strategic partners that kind of offset your weaknesses, and maybe your weakness is money in the pocket. And so, at the end of the day, the person that wins in our industry is the person that becomes a professional at deal flow generation. And so I know, the mantra out there is always cash is king or cash flow is king. I wrote in Note Investing Fundamentals that deal flow is king, because without deal flow, none of cash or cash flow or anything occurs. And so the one that becomes proficient at bird dogging, at finding deals, will always attract the capital that they need.
And I think a lot of people don't think that way. They first go look for the money and then they go look for the deals. But if you've got attractive deals, money will find you. And it's kind of counterintuitive to what we necessarily think.
Yeah, because money's not looking for, a hollow relationship or transaction. I mean, money's looking for real deals from real operators.
So with the changes in the mortgage industry right now, because let's face it, rates were at 3%, 4% for a long time. Now mortgages are up at 6 and 7%. How has that changed the market?
So from a micro perspective, it hasn't affected us as much because we buy post-originated mortgages. Rates already set. These mortgages were originated 5, 10, 15 years ago. So to us, it doesn't matter whether the 30-year fixed is at 6% or at 3%. Now, from the perspective of investors we work with and the returns we provide in our income fund, there's a little bit more. Our income fund that pays 9%, maybe not as attractive when inflation, CPI is hitting at 8 point something percent. So that's where we have trouble. Not so much the mortgage rate, because there's such a lag behind what the current interest rate environment is and the notes that we pick up on the back end.
Does the underlying interest rate have any effect on the price that the bank is selling it for? It
might. So it depends. I mean, there's really the value of that mortgage is tied to the equity cushion supporting the mortgage note. So if the homeowner, if a mortgage note is $100,000, the unpaid principal balance, and the property's worth $300,000, then you have $200,000 worth of equity cushion. And so, 33% loan to value or what have you. Now, if, that interest rate is at 3%, it's still worth buying because it's non-performing, and you're gonna work it out just the same. Then if, the interest rate was at 7% on that same 100,000, but the property was only worth 150,000, I would take the 3% note any day of the week over that. So in that case, it doesn't matter as much. Really, at the end of the day, the equity cushion is really what matters.
Okay, I didn't know if it affected the way when you went back in to renegotiate pricing, because we've had a period of probably 20 plus years of rates dropping, and all of a sudden now you're in a renegotiation standpoint and the rate goes up versus down. But I guess they're buying a payment at the end of the day, and you're extending terms.
Yeah, they're buying a payment, and you're going to extend terms based on the current rate environment. So, that's just where it's at now. On the performing mortgage side, we buy performing mortgages into our income fund, and these are mortgages that were in default, that got modified and got reseasoned. So once they get reseasoned over 12 months, 24 months, then, the borrower's back on track. They got remarried, they got their job back, and so forth. And so we'll buy those in at an 11, 12% yield, even though the coupon rate's at 6%. And so that's what gives us our equity cushion, which is our investment to value, which we target at 65%.
And those are going at a discount because the people have shown in the past that they might default. Is that what it is?
Well, that and if you think about the hedge fund or a company that picked up those mortgages, they may have paid 25 cents on the dollar, and now they're going to 2x their money in under a year or at a year, year's point. So they're doing well. And those loans, once they've gone down that road, they're not able to be securitized, and they're not able to go back into the banking system that way as clean paper because they have that blemish on it. So the hedge fund is not interested in the longevity of the cash flow. They want just to 2x or 3x their money and be on their way.
And that is the way they behave. Give us our money. Let us move on. We're not here for...
Yeah. But for us, we want to capture every monthly payment due on the loan.
What usually causes people to get in trouble with their mortgage?
3 things. So first is love. They get a divorce. Second is health. They run into some bad health circumstance, or lost a job. And so in most cases, what we find, and I'm talking the majority of the cases, is when we buy a mortgage loan and it's 4 years in default, they got their job back 2 years ago, or they found, love again 3 years ago, and they're remarried. They just kind of put this off to the side, out of their mind, or they had trouble connecting with the lender, or something occurred. And now they're back on track. And it's just a matter of working with them, building their trust, and figuring out a win-win.
And I know more often than not, the bank will not talk to you. They won't have a conversation.
Yeah, banks are weird. I don't know how else to say it. I mean, they're not built for customer service. They're hardly friendly of any kind. But service in this country is suffering, not just the banking system. But yeah, I mean, you call us, like we're like our asset management team. They're built to be respectful, genuine, transparent. We always give options with people. We give usually 3 options for people to get back on track. So we give empowerment to the homeowners to pick which options work best for them. So we actually treat them in a humane manner. And I'm going to let you in on something here that this is groundbreaking right now. So I know we're recording. If you treat people with kindness and respect, they tend to pay you more so than if you don't.
And it's true. A little bit of kindness goes a long way in every situation, I think.
Yeah.
And it's something we don't do enough of.
No, I mean, it's beneficial financially to be that way. I mean, if many companies could learn that, just learn that, like, hire kind people, hire people with integrity, people that just are pleasant to be around. And if you just kind of start there, they're going to interact with the clients the same way as they kind of interact around the office. And we have that. We built that team around that type of person. So when you call, you're not going to ever get roughness from us. That's not our job. That's not what we're looking to do. That other company that wants to take the property, they're not even going to pick up your phone call because they just want to go straight to sale on your property. But, for us, we're going to do everything not to go to sale.
It's funny. I remember a while back, someone was talking about recruiting, and they're like, go to their LinkedIn profile and look if they're smiling and look at their eyes. He goes, that's one of our ways that we pick people. He goes, if they're not happy, then we're not picking them. But at the same point, I think in a lot of corporate America today, leadership has not done its job of creating an environment that is filled with kindness. And when leadership doesn't do that, it's not going to flow down. Yeah.
Yeah. Everything stems from clarity of roles and responsibilities to kindness, to communicating well with each other in a respectful manner, all those things.
So one of the things when you buy these mortgages, sometimes there are other bills due. Could be tax liens, could be other mortgages and so forth. And I know that's what we talked about. Like, you have to have the cash in place to cover taxes, cover back taxes, or whatever happens to be in that particular area. And I had more of a technical question. Does it make sense to pay the back taxes, or does it make more sense to buy the tax lien?
Well, the tax lien, the back taxes could already be a tax lien that's purchased.
So someone else owns it.
Someone else owns it. Yeah. Yeah. So you just never know. It's always a good practice to make sure there's no tax liens on the property, and then pack it into the loan when you're able to. That's the best practice to do it. But even better, or even before that, is just to know what the situation is before you buy the loan, so you can factor that into your returns.
And most of the real estate investors I deal with are not on the note side, they're on the actual buying side. So they tend to be much more emotionally involved with properties, and they tend to be much more optimistic on value. Does the same thing happen in the note industry, or is there more discipline, so to speak?
Yeah, so it's not as relevant to get the exact precise number. So in other words, if the mortgage loan is $150,000, property's worth $250,000, there's $100,000 of equity. I don't care if the true value is $220,000. If the true value is $270,000, like, that doesn't matter to me. What matters to me is that I know I do have some quality level, some quality amount of equity coverage, and that my due diligence tells me that the homeowner has an ability to get back on track with me. That's very significant, because when you focus due diligence just on the property, you're going to get what you focus on, and that's the property. I want to know about the homeowner.
And that's basically because you're trying to get them back to paying.
Exactly. Yeah.
And so that's your outcome. And so you're making sure that you're getting into situations where that is more likely of an outcome.
Yeah. So does, like, the credit report show me that everybody and their mother is getting paid but me? It's just as an example, like, does their skip trace report, show me that they have all these certifications, that they're a health professional, that they have stable employment, that they don't have any creditors listed on their credit reports, so they have a good disposable income, these kinds of things.
And you can find out all of this information about people?
Yeah. Yeah, there's resources to find out.
I don't know if people
legal
realize that.
resources.
No, I understand that, but I don't think people realize that a lot of what they think is private isn't as private as they think it is.
Yeah, I mean, it's no different than when you go in to a bank and get a loan. I mean, and they ask you every single question imaginable. They're doing all this. I mean, they're doing a bankruptcy search on you. They're going background check. They're doing all this on you.
So you're doing the same thing.
We do the same thing that major lending institutions do.
Is there anything that we haven't talked about with note investing that we should have covered?
Just that, I'd say that when I sold the government contracting company in 2013, up until that point, I was a different person. I had, I was more, I'd say I was more superficial, more just kind of, I wasn't humble. And I was probably hard to deal with from my wife's perspective. And then I found a relationship with Jesus in 2013 and really transformed my world. And I say that because I learned to just shift my mindset to be of service. Now I didn't care about the material things as much. I wanted to go into something where I could be of service and I could be help bring a greater good in some way. So then I found mortgage notes a month later after I sold the company. It was amazing. And then I just started buying, and I'm just talking to these people, and they're just like, wow, nobody's ever treated me like a human from a banking institution. No, well, you can do that. Are you sure? Is this a scam? And then I just started, and now I'm not saying everyone's happy to hear from me and start making payments to me. I'm not saying that, but at the end of the day, we have a lot of people that will tell us that, hey, you know what, thank you, thank you for helping me kind of come to terms with this, where now they can actually own their home outright. If they make all their payments, they can own their home in retirement and have something for them versus something hanging over their head. And I'm like, this is the greatest thing. And then what I learned in 2020, because I was self-funded for the first 7 years, from 13 to 2020, is my business partner and I, we decided we wanted to launch an income fund for our friends and family that pays monthly passive income. And then I realized there's a whole world out there well beyond my little network that actually wants monthly passive income they don't have to think about or work for. And I'm just like, and then so it just became another mission for me, like helping homeowners and now helping families bring in more income into their existence. And I'm having a good time.
Well, that's good to hear. And spirituality is one of our tenets. Was there something that happened in 2013 in your life that drew you to that? Or was it just random encounter?
Yeah, so it was years of, I was selling to the federal government, my wife and I, and I would spend weeks at a time away at project sites, at different military installations, at different government buildings around the country. And I just kind of grew stale spiritually, and I just kind of lost a sense of myself, and I just had high blood pressure. I was always stressed, always heavy deadlines having to be met, and so I wasn't working. I wasn't working for my own good, if I'd say. And so when we sold the company, we just had our first child. And so our son, we have 4 children, and our youngest, he was 1 year old. And then we're like, I need to be about more than just myself, what I want to like. So that's when I just learned about, Jesus. I learned about a family and just love and all these things that are just well beyond myself.
Kids have a way of doing that.
They do. Yeah.
It's quite enlightening.
Yeah. Oh, yeah.
It's time to learn the secrets of life. What's your secret to living an abundant life?
It is having goals that are focused on development, myself, and within myself, as well as business goals. So I can share my goals for this year if
Sure.
that's okay. They're quick. To be a spiritual leader for my family, to treat my family with love and kindness, to be in top shape physically, mentally, spiritually, and emotionally, and to achieve my work goals. So I feel like just having a balance in terms of your focus is important. It can't be all about the money. And if you're not making enough money, it can't be about stressing over the money, which shouldn't be that matter.
And that's what everybody does.
That's what everyone does. And that's why everyone should be focused not on investing in stocks, in my opinion. I'm not an advisor, but I don't think people should be focused on Wall Street for their solutions and their financial freedom. They should be focused on assets that produce passive income. So then they should be focused on building that passive income so that it exceeds their active income and they can retire at some point.
Or at least have the freedom to do what they love without worrying about it.
Yes.
What did you learn later in life that you wish you would have learned sooner?
Buy assets that I can control in the cash flow. So, like everyone else, I bought some assets that purely for appreciation and speculation reasons, and which is, the Wall Street casino. And once I learned mortgage note investing, and I started real estate investing in 2009, I just learned about passive income. I'm like, I need to bet on myself. And these assets that I bet on need to produce consistent and predictable income.
That always works. And you have to rely on yourself, because if you don't, no one else will.
Yes.
If you were to give an 18-year-old one specific piece of wisdom, what would it be?
Chart your own course. So whatever you were told, you have to go to college, you have to go here, you have to do this. Just put that aside and just really be who you want to be. Now, if you want to be a medical doctor, obviously you have to go through a course, right? That's already kind of, preordained and mapped out and all that. But for the most part, you need to, chart your own course to be yourself. You can be a multimillionaire without going to college. Many people do it. And so that's just what I would say.
If you want to help people who are sick, be a doctor. If you want to help people be healthy, there's probably a better way.
Yeah.
Because our medical community is all focused on sickness care, not on health care, which is a whole nother topic for another day.
Yes.
If people would like to learn more about you and your company and connect, what's the best way for them to do that?
Yeah, they can reach out to me at martin@bqfunds.com. And that's martin@bqfunds.com. And I even have, I've been maintaining my own living financial statement for many years. And I do all my goal setting and plan journaling. I've done that for years as well. So I have a living financial statement template that will help people situate themselves financially and break out their passive income with active income and all that. If someone emails me, I'll send them a copy of that.
Cool. Thank you so much for doing that. And we'll make sure to put the company info in the show notes. Thank you so much for joining us.
Of course. Appreciate you, Rocky.
Is this an area of investing that might be of interest to you? What about Martin's story on finding Christ and how it changed his life? Is spirituality part of your daily life? And does it help you to be more connected to serving others? We all have our own journey, and enjoying that is what it's all about. When one part of life is out of harmony, it tends to affect every other part. So keeping it all together is important. What actionable insights can you take from today's episode? What can you do to move forward in your life and build your wealth? There's a million ways. You gotta find the one that works for you. If you enjoy or get value from Richer Soul, I'd appreciate it if you'd support it by forwarding this to a friend or sharing it wherever you typically share podcasts. Next week, we've got Monica Rhodes to talk about how to be happier. I know you'll love it. Have a wonderful and abundant week.